The very first step in buying a home is getting a mortgage, going through the pre-approval process. And this step is often overlooked because of the excitement when it comes to buying a home. But in today's video, I want to walk you through this process, what it looks like as a first-time home buyer, what it looks like as a buyer who hasn't been through the process in a long period of time, step by step, what it takes to get a mortgage, what documents you'll need, on top of how the process will flow so that you know exactly what to expect when you're getting a mortgage to buy a home. Now, one of the things that often comes up when talking about this process is how early is too early to start the process of getting a mortgage, of getting a pre-approval? And the answer is it's never too early, but at the same time, you don't want to be 3 years out doing a pre-approval now because a lot's likely going to change within that 3-year time period. But if you think you're going to be buying a house in 6 months, a year from now, I would say start the process now, because by doing that, it's going to tell you exactly where you stand, what things you need to work on, if any, and put you in the best position to buy a house when it's the right time for you. Now, the very first thing I want to talk about when starting the process of getting a mortgage, of going through that pre-approval process, is the idea of budgeting. Prior to ever calling a lender, prior to ever going to a bank and submitting your documentation, all of which we're going to talk about here in a moment, I want you to go through your expenses. How much income do you take home? Where are you spending your money with regards to utilities, cell phone bills, daycare, going out on date nights, all of this stuff, and see exactly how much money you are comfortable spending on a mortgage every month. Now, this isn't something that you absolutely need to know up front, but I believe it's crucial in setting yourself up for success when you're going through the process. But after you have that budget in place, the next 2 steps in this process can be interchanged depending on how you want to approach the process. But before we dive into that, I want to mention a course I created for first-time homebuyers called Becoming HomeWise. It's a step-by-step process to take you through the entire process of buying a house, from the mortgage to the real estate side to writing an offers. It really takes you through every step in the process. So if you want to find out how to do that, how to become HomeWise, do me a favor and check that link below. Now, the 2 steps that I were talking about earlier are either gathering documentation for the pre-approval up front before having that conversation with the lender, or having that conversation with the lender, at which point you get off the phone and then you gather the documentation. So either of these you can do up front. I much prefer the idea of gathering the documentation up front. That way, when you're having a conversation with the lender, you have the numbers right in front of you. You can have a full, transparent conversation, knowing the numbers that you're providing them are accurate based on you having the documents right in front of you. Now, one question that often comes up is, what's the difference between a pre-approval and a pre-qualification? Well, a pre-qualification means that you're going to have a conversation with a lender. They're going to ask you some questions. You're gonna, respond with some answers. They might say how much income you make, and you're gonna say $100,000 a year. Or do you have an idea of your credit score? And you might say it's 700. But they're not actually receiving any documentation from you. They're just having that conversation, and from that, they're coming back and providing you some numbers. That's a pre-qual. That doesn't really do anything in the big scheme of things. You actually need to go through the process of a pre-approval, which means that you're going to have to provide documentation. So when you tell them how much income you make, you're going to have to provide documentation to support that, along with allowing the lender to run your credit, providing the documents that we're going to talk about in a moment, and that's going to get you a true pre-approval. And the pre-approval is what you need in order to go shopping for homes. The reason you want to go this one extra step and provide the documentation is so that you actually know the pre-approval that you're getting, the information that you're receiving from the lender is accurate, and that you're not going to have problems when you're out there shopping for homes. The last thing you want is to find your dream home, write an offer, get it accepted, and then provide documents to a lender, and they look at them and say, unfortunately, you don't qualify, right? By doing this up front, you're taking the necessary steps up front to confirm that you're actually good to go. So with that said, I like to start with gathering those documents. Those documents are going to be your W-2s. If you're a wage earner, if you work, as an employee for someone else, you're going to get a W-2 at the end of the year. The lender is going to want to see the last 2 years of your W-2s. Now, if you're self-employed, you're going to have to provide your full tax returns. On top of that, you're going to have to provide pay stubs. So your last 2 pay stubs from your employer, you're going to need to provide that, because what your lender is going to do is make sure your income is consistent over the last 2 years. And they're going to do that by looking at those W-2s, by looking at those pay stubs. On top of that, they're going to want to see asset account information. Now, this is used to confirm your down payment, your closing costs, the reserves needed in order to purchase that home. And these account statements that I'm talking about can come from your bank. We're talking checking, savings account, any retirement accounts that you have, 401ks, IRAs, or investment accounts. Maybe you have an account with Fidelity or Charles Schwab or what have you. You're going to also provide that documentation. Now, earlier I mentioned tax returns if you're self-employed, but you're also going to want to show tax returns or have to show tax returns if you're using any capital gains income to qualify, or if you own any investment properties. The lender is going to want to see the tax return, and we're talking the full tax return. Now, if you're self-employed and you own a business, it's going to be your individual tax returns plus your business tax returns. And lastly, if you're paying or receiving any sort of child support, alimony, the lender is going to want to verify that. So you're going to have to provide a divorce decree, any sort of documentation that shows exactly how much you're paying and for how long you're paying and or receiving it. So once you have all of this documentation gathered, the next step is going to be to call a lender. Now, maybe you took it the other direction and you called a lender up front and had that conversation, and then you're gathering the documentation. Whichever way you're going, just know that that's the document you're going to need. Again, I like to have the documents up front so that when I'm having that conversation with the lender, I have all the answers right in front of me that they're going to ask me, and I know that it's going to be accurate because I'm looking at the documents that I have, right in front of me, like I mentioned. But the next step is going to be to call that lender. Now, where do you find a lender? The best source, in my opinion, is to get a referral from a friend, from a family member, someone that's had a good experience. That way, you're in good hands. You have an idea of what to expect, but you can also go into your local bank. A lot of people go online and search lenders, not typically what I would recommend, but oftentimes you can find somebody great there. But either way, you want to go to a trusted source to make sure, again, that you're in good hands, to make sure that the information you're getting is accurate, that the person actually knows what they're doing. Now, if you're watching this, you don't have a lender, you don't have a referral, I put a link in the description below. Check it out. I'll refer you to somebody that I know, like, and trust that does a great job, that'll take care of you and guide you through that process. Now, the next step after having that conversation with the lender is you're likely going to fill out a loan application. Now, you might have a conversation with the lender, and after that conversation with the lender just says, hey, listen, based on our conversation, I don't really think you're in a position to do, to buy a house at the moment or to get a mortgage at the moment. And, you might not waste your time doing that because of X, Y, or Z. But in the case that you're ready to buy a home, you're in the process, you're getting close, you're going to fill out that loan application. Now, that loan application is going to ask you a bunch of personal questions, some demographic questions like, your date of birth, your social security number, that sort of thing. On top of that, you're going to have to fill out your residence history for the last 2 years, on top of filling out your employment, your income information also for the last 2 years, as well as listing the assets. Now, what are assets? It's the accounts that we mentioned earlier, your checking, your savings, your retirement accounts, your investment accounts, all of the documents that I had you gather earlier. When you fill out the loan application, you're going to have those documents in front of you, which is going to be really easy to fill out this information so that your lender can take the next steps, which is likely running your credit report. So you've now talked to a lender, you filled out the loan application. Now what you're going to do is you're going to take all of those documents and send them to the lender. Now, how do you do this? Well, a lot of lenders these days have secure portals online that you can upload these documents, directly to them. You might take them into their office and hand them over directly, but either way, you're getting these documents to the lender. Now, once your lender has these documents, he has the loan application filled out, you've likely filled out a disclosure that allows that lender to run your credit. The lender is now going to run your credit, which is going to list all the liabilities that you have on your credit report, car payments, student loans, credit cards, that sort of thing. And from there, they're going to start to analyze the loan application along with the documentation you submitted, in addition to looking at your credit report. Now, this is going to give them the ability to calculate your income per underwriting guidelines. You might be like, what does that mean? Well, just because you make, say, $60,000 a year doesn't necessarily mean the lender is going to give you credit for $60,000 a year, just based on how that income is actually received. So the lender is going to look at that information, analyze it per the guidelines to see exactly how much income they can give you to use towards the loan application. On top of that, they're going to look at those asset accounts that we mentioned earlier. Make sure there's no large transfers in there. If there are large transfers going from one account to another, or they see a large sum of cash being deposited, they're probably going to ask for some sort of documentation on that just to make sure that money can be used. In addition, they're also going to look at your employment history, make sure employment is good. In some cases, people have a transfer of jobs. They go from one job to another or what have you. The lender's going to look at that information, just make sure that there's no issues with regards to moving around from different jobs, just to make sure, again, that the information you're providing is actually accurate and can be used per what the underwriter is actually going to allow. And from there, they may actually come back and ask for some additional documentation. Oftentimes you'll submit this information and, the lender will look at it, and after looking at it, they realize that they need some additional documentation. They see a transfer in your account going from one account to another, or a sum of cash, like I mentioned earlier, being deposited. Okay, can you tell me what happened here? Can you write me a letter of explanation and tell me what actually took place so that we're on the same page and making sure that everything is on the up and up when it comes to that documentation. Now, once a lender has all of that information, they're able to look through it and more or less tell you what your loan options are. Now, many times a buyer goes in and says, hey, listen, I'm looking at putting 5% down and doing a conventional loan, not realizing that they might have other loan options out there. Maybe they can do an FHA loan, or maybe instead of doing a 30-year fixed, they can do an adjustable rate mortgage. Well, this is the time that the lender is going to have that conversation. They're going to go over the different loan options with you, where they likely talk about how much your monthly payment's going to be, how much money you're going to have to bring in to close the loan, all of the important questions that many home buyers out there have to start the process. How much money am I going to need? How much is my monthly payment? Well, you can't really get there without the steps that we've talked about in this video. So once they've gone through that process that we've talked about, then they're able to come back and actually provide you with the information that you likely wanted to know from the start. This is the point in the video where I'd like to ask a favor for some help, if you will. My goal with this channel is to educate as many home buyers as possible, and you can actually help me do that by hitting the thumbs up. It helps the YouTube algorithm, helps push the video out in front of more people, which ultimately helps me accomplish my goal of educating more buyers. So please take the time, smash that like button, and subscribe to the channel to stay updated on everything real estate related. So now that your lender has analyzed your information, you've talked about different loan options, now you're basically just waiting for that pre-approval to come back. Now, one of the questions that often comes up is, how long does the pre-approval process take? Does it take days, weeks, months to happen? No, typically not. It should happen within about 24 to 48 hours, depending on how busy your lender is. Now, if you have somebody telling you that you're pre-approved, 4 or 5 hours after filling out the loan application, as long as you provided that documentation, that's a realistic time frame, especially if you have a super cookie cutter file. Now, some files are a little bit more complicated. You have to get underwriters involved from the start to analyze certain things. And in some cases, that might take a couple of days to happen. But either way, your lender should be able to give you a timeline up front that tells you exactly how long that process is going to take. But if you're not getting the answers that you want, if things are taking way longer than you thought they would, just make sure you're having that conversation to figure out where that problem is, or if there's a problem at all, because at the end of the day, the process shouldn't take more than a couple of days. Now, another question that comes up is, how long is this pre-approval good for? I'm not thinking of buying a home for 6 months or maybe even 9 months. You told me to get the process done now. How long is this actually good for? Well, the reason, again, that we're telling you to get it done sooner than later is so that you actually know where you stand in the process. Some people have things that they need to work on. They need to save more money for a down payment, or they need to work on their credit scores, or whatever their situation is. By getting it done up front or sooner than later, it lets you know exactly where you stand. That way you don't have to wonder what if as you get closer to the process. But typically a pre-approval is good for as long as the information that you gave the lender is good and there's no changes to it. Now, I know that sounds pretty boilerplate, coming across like that, but the idea is, if your credit's not changing, your income's not changing, you haven't gotten any new debt, everything has stayed the same, then the pre-approval's probably good. But with regards to a pre-approval, I would say that you probably need to get it updated about every 90 days just to make sure nothing's changed. Now, as the consumer, whether or not you've been making your payments on time, whether or not you've gone and run up credit card bills or gotten a new car payment or something has changed. If something's changed, then you probably need to update the pre-approval. But if everything has stayed the same, you have the same job, you're still making the same payments, no new debt, then chances are your pre-approval is probably still good many months from now. And one of the other questions that often comes up is, how much will this process cost? How much is it going to cost me to do this? And the answer should be zero. A lender shouldn't really be charging you anything in order to do the pre-approval process. Now, I know some lenders out there will charge you for a credit report to have your credit run, but at the same time, there's many lenders out there that won't charge you a thing. When I was a mortgage broker back in the day, going through the pre-approval process, that was a cost I incurred as a mortgage broker or as a mortgage professional. I didn't charge anyone to run their credit up front. So at the end of the day, you can find a lender out there that will do this process for you, or you shouldn't have to pay any money up front in order to go through it. So now you have the pre-approval, you've been approved for a mortgage. Now what's the next step? The next step is now you get to do the exciting part. You actually get to go out looking at homes with confidence. So find a real estate agent, get them to start showing you properties, go to open houses, look at houses, and once you find something, write an offer. And lastly, if you need a mortgage professional or a real estate agent, like I mentioned earlier, do me a favor and check that link below. But the great news is now you know how to get a mortgage. But if you're wondering, how do you buy a house in 2023? Do me a favor and check out this video here.